So I figure a good place to start is to talk about how you should approach investing in terms of how you're doing your analysis. I'm an analyst, and so for me, it's very important to look at a business as a business, not just as a stock that has the potential to go up or down, hopefully up. But when you're looking at potentially making an investment, to really think about what makes this company a potentially good investment. And I think it's very common. I've heard this question a lot. What's a good metric to look at? Is it PE? Is it growth? Is it price to sales? Whatever these different metrics are, you can't really apply them to every different business and assume that it's a good indicator of whether you should participate in owning that company's shares. You have to really understand that every business is different. Every company is different. So first of all, when I talk about businesses, I'm talking about industries. So certain metrics are more important and more relevant in other industries. And because the accounting of how a business reports their numbers is more or less relevant depending on what the business is. And you have to account for certain adjustments in different industries. Now, often a company will give you the adjustments themselves, and you have to decipher whether you think those adjustments are relevant or whether you want to make your own adjustments, which I typically do. And it's something that you learn with practice. What works in certain industries, what depreciation, for example, can you back out or not back out in terms of what's relevant to a company's cash flow. Like, let's say I've got a shipping company. Ships are a real hard asset. They do definitely depreciate. And so if you're not using that money to pay down the debt on the ship or something, that's a big problem. Whereas if you, let's say you're a consumer goods company and you bought another consumer goods company, you would amortize that purchase price over a long period of time. And that's a non-cash amortization. That's a write-off that the government actually allows the company to take pre-tax. So it is a non-cash charge. And it's just one example of differences depending on the industry that do come up to the accounting. Even something like a commodity business, like gas stations, let's say, there is the revenue of that company, or like a pipeline, I don't know, something where the revenue moves around. Oh, a utility is a great example. I don't know why I didn't just start with that. Let's say it's a utility. Their top line is going to move around a lot, but it's because they get to pass through the cost of, like, let's say it's an electric utility, and they get to pass on the cost of they have natural gas plants and they're burning natural gas to create electricity, and the price of natural gas moves around, but it doesn't actually matter to the utility because that brunt is borne by the utility's customers. So in that specific business, it makes more sense to look at gross profit. If you just looked at the top line, it wouldn't really make any sense. So that's why it's just a few examples. You can't apply one metric to every industry. And I got a little bit into the weeds there, as I tend to do, but my point is you have to look at a business as a business, not just as a stock that you can apply a certain specific metric to. So what are you actually doing to analyze this business? Well, when I look at something, the first place I start is the financial statements, and that the most recent financial statements specifically, and it gives me a baseline for where's the company at. And then from there, I can go back and look at the history of financial statements. What were the revenues, the profits? What did the balance sheet look like before? Accounting is a very important part of understanding a company. So starting with the current financial statements gives me the context, the base, in order to build a foundation of looking at the history of the company. And from there, I can start to piece together why certain changes happened, where they potentially are going in the future, and I can supplement that with press releases, with transcripts from their conference calls. I can speak to the IR team or the management team, depending on the size of the company and their availability, and really fill in those gaps in order to build a complete picture of a company. And the thing that's great about this business that makes it really interesting is that it's not so black and white, where it's either one way or it's the other way. There's a lot of deciphering what you believe is important to a business and what you believe is relevant to the future of that company. And once you've done all of that research and done all that synthesizing of information, then you can take that and look at the price and say, is this a reasonable price to buy the future earnings of this company at? That's really what analysis boils down to. And it gets really, can get as granular as you want to. I enjoy it a lot. Some people will look at this and it's just a lot of numbers and a lot of work and it's not appealing. And to me, I think that's really where I think the value of somebody who does the research comes in. But for some people, this is really interesting, and I encourage everybody to go out and read a 10K and try to understand a business and learn about a business, because this is what our world is. You're just learning about things that happen in real life, and you're hearing it from companies who are selling things that you're really interested in, whether it's computer parts or again, if it's a utility or if it's whatever business. There are all kinds of public companies out there, and they all say very interesting things in their annual reports, and you can look at what kind of profitability each different business has, and maybe you're interested in getting into a company or a business and you're just curious for that reason. Whatever it is, I think that there's a lot of great information out there that's published, and we're lucky to have that as part of our system, is that the information's available. And that's just kind of what I wanted to start with, is how do I actually do that research. And on the point of price, I think that's another place that people commonly start, is looking at the price history, the chart of a company. And to me, that's the worst place to start, because you're going to get an impression based on the movement of a stock. Let's say you look at a stock chart and it's just been up and up and up. You're going to go into that research favorably inclined to it, whether you're aware of it or not. And if it's down and down and down, you're going to go in with very low expectations. So the best thing is to come to a conclusion and then compare that to the price. And then you can even look at the price history and try to reconcile what the changes are. Does it make sense? Does this thing trade based on the fundamentals, or does it trade on something completely different? And that's a question that you can try to figure out for yourself. But if you're really planning on investing in a business, the best place to start is looking at the business itself. And then Mr. Market gives you a price. Mr. Market is a Graham and Dodd concept, where the world offers you a different price on these companies every day in the form of a stock price. And you get to decide if you want to buy or sell at that price. And so you're not beholden to anything. You get the flexibility to invest or not invest in a company. So why not take your time, do your due diligence, and if you think it's a company that's a great business and it's at a reasonable price, that's the time to buy. So that's the very basic 101 on what I mean when I say do your research and where to start with that.